Gold's price appears to be moving in a relatively sideways fashion. In today's report, we intend to have a look at the implications of Trump's tariff policies while discussing last week's jobs report. For a rounder view, we conclude the report with a technical analysis of gold's daily chart. President-elect Trump's inauguration date is set to occur in 6 days on the 20th of January 2025. President-elect Trump's economic policies are beginning to take shape, and in particular his tariff plans, which do not appear to have spared either friend or foe, as seen by the president-elect's comments to impose a 25% tariff on imports from Canada. The incoming U.S. administration could potentially use the International Emergency Economic Powers Act, which would allow the new administration to implement tariffs on day one by citing an unusual and extraordinary threat and declaring a national emergency. The proposed Trump tariffs have sparked widespread concern about resurgence of inflationary pressures in the U.S. economy, and thus with the date of his inauguration rapidly approaching, gold's appeal may have increased given its status as a hedge against inflation. However, should Trump's tariffs ambitions to be scaled back, it may have the opposite effect and thus could weigh on gold's prices. This past Friday, the U.S. employment data for December was released. The non-farm payroll figure was expected to drop to 154K, yet exceeded expectations by coming in at 256K. Moreover, the unemployment rate was also expected to remain unchanged at 4.2%, yet came in at 4.1%. Overall, the U.S. employment data has been described as a blowout jobs report which showcased the resiliency of the U.S. labor market. The stronger-than-expected employment data appears to have intensified expectations by market participants that the Fed may keep rates higher for longer, with Fed fund futures currently implying one rate cut in September for the year. Thus, given the assumed inverse relationship between gold and the dollar, the release may have temporarily weighed on gold's price. Hence, attention may turn to the release of the US CPI rates on Wednesday, which are expected to accelerate from 3.4% to 3.7%, implying a persistent inflationary pressures in the US economy. Therefore, in theory, an acceleration of inflationary pressures in the US economy could intensify calls for the Fed to remain on hold for a prolonged period of time, which may be seen as bullish for the greenback and thus could weigh on the precious metals price. On the flip side, a lower than expected inflation print could have the opposite effect. On a technical level, gold's price appears to be moving in a sideways fashion, with the precious metals price facing resistance near our 2,690 resistance level. We cautiously opt for a sideways bias, and supporting our case is the RSI indicator below our chart, which currently registers a figure near 50, implying a neutral market sentiment. Yet we would also like to note the upwards moving trend line, which was incepted on the 30th of December 2024. Nonetheless, for our sideways bias to continue, we would require the precious metals price to remain confined between the 2,622 support level and the 2,690 resistance line. On the flip side, for a bullish outlook, we would require a clear break above the 2,690 resistance line, with the next possible target for the bulls being the 2,743 resistance level. Lastly, for a bearish outlook, we would require a clear break below the 2,622 support level, with the next possible target for the bears being the 2,565 support line. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you solid trading.